Dear friends, welcome to Weekly View on Markets. This week, for the first 3 days, markets were consolidating, and on Friday, markets have bounced back. GDP figure for first quarter was announced, and GDP figures have come out at 7.8% growth for the first quarter, and auto sales for the August month, PMI data for August month, all were good. And on the back of this, we have seen a good rally on Friday. Mid and small cap indices have closed at record high levels. I have looked at the valuation because the markets have run up. Despite the recent rally, valuations have not gone up considerably. We are in the beginning of earning cycle recovery, and earnings of the companies from here on are likely to recover and go up in coming quarters. So on the back of this expectation of better corporate performance, the market is going up, and there is more room for the markets to go up as valuations looks fair and reasonable. So it is good time to add to your investments and also remain invested for further gains in the coming quarters and months. Let us look at performance of indices during this week. Nifty has closed at 19,435, up by 170 points, that is 0.88% up. Bank Nifty has closed at 44,436, up by 204 points, that is 0.46%. Bank Nifty is relatively underperforming past 2 3 weeks. Whereas we can see that mid cap index has gone up by more than 2.5%, and small cap index has gone up by almost 4%. Mid cap index has closed at 39,445, up by 974 points. Small cap index has crossed its crucial resistance of 12,000 and closed at 12,260, up by 517 points. India Wix has dropped further and it is at 11.36. That means the volatility in the market has subsided. Let us look at the sectoral performances for this week. Most of the sectors have gained during this week and closed in green. Realty sector gained the most, more than 5.7%. Metals stocks have gained more than 5%. Auto sector stocks have gained. So, on the back of good sales in the month of August, the automobile sales figures were out. So, automobile stocks have rallied by more than 3.6%. Commodities stocks have gained about 2.9%. Consumer durables have gained about 2.3%. Manufacturing sector has gained about 2.26%. Information technology sectors has gained about 1.9%. Media stocks have gained more than 1.3%. And remaining other sectors, except FMCG, healthcare, and pharma, all other sectors have closed in the green. Let us look at technical charts and try to understand how the market is poised technically. This is the daily chart of Nifty index. I have retained the trend lines which I had drawn in the previous week. As we can see, Nifty has come to the support level and it has taken the support and we are seeing a bounce back from here. This is how the technicals work in the market. So, the Nifty has taken support at the indicated support level, and from there it has gone up. And resistance for Nifty will be at 19,600 levels. And if Nifty is able to take off that resistance, we will see further rally towards 19,800 to 20,000 in coming weeks. This is a daily chart of Nifty Midcap Index. In previous weeks also I have been telling there is no weakness seen in the Nifty Midcap Index chart and it is likely to go up. We are seeing a kind of vertical rally in the midcap index for past 2 to 3 months, and this outperformance of midcap sector is likely to continue as charts do not show any weakness. Nifty small cap index also shows a trend which is similar to the mid cap index. Here we can see the chart is making higher tops, higher bottoms. Price volume data doesn't show any weakness, and outperformance in Nifty small cap index is also likely to continue. And technically, it has taken out the resistance of 12,000 levels and started trading in the blue sky territory, that is all-time high levels. There is no technical resistance from here on. So the rally in small cap index is likely to continue. There may be few days of consolidation in small cap and mid cap index, but that is a natural phenomena after a big rally. So one should not get worried on this and hold on to the investments. Now let us look at some of the fundamental macroeconomic factors of the market. The biggest boost for market which was consolidating for last 2 to 3 weeks has come from the GDP growth data of April to June quarter. That is the first quarter of the current financial year. It has come at 7.8%. So this growth is much better than what was the full year growth for financial year 22 and 23, which was at 7.2%. Automobile sales for the month of August have come quite good. All the companies are showing a uptick in the sales overall. Of course, there are few segments which needs yeah, improvement, especially rural two-wheeler sales, exports, tractor sales, etc. So it is always told that the automobile sales figures are the leading indicators of any economy. And even in India, if we see in economic growth started slowing down in 2017 to 2019 period. But if we look at automobile sales data, the data where the sales of automobile companies were falling 1 year earlier. From 2006 onwards, we have seen that automobile sales data was declining. So this gives a leading indication about the growth in the economy. The auto sales picking up is a good sign. So let us look at various companies' performances. Maruti small car segment has shown a degrowth year on year. SUVs sales has almost doubled, more than 54% growth in SUVs. Overall growth in the Indian as well as domestic markets That means the Maruti here on is going to do very well. And we have already seen jump in the stock price of Maruti from 9,500 levels, and it has crossed 10,000 level. Tata Motors passenger sales have dropped by about 3%. Commercial vehicle sales has gone up by around 2%. Heavy vehicle sales has gone up considerably. So heavy vehicle sales is supporting the economic growth. The trucks, big passenger vehicles, they all are come in the heavy vehicle segment, and earth moving equipments. These kind of auto sales from Tata Motors indicate good growth. That means the economy is expanding and there is demand for heavy commercial vehicles. Ashok Leyland has also reported growth in medium and heavy commercial vehicles. The sales have gone up by almost 12%. Exports have gone up by 10% for Ashok Leyland. Mahindra and Mahindra, which covers almost from two-wheelers, three-wheelers, and trucks, jeeps, SUV segment, they cover all segments and including tractors, has done very well. The sales have overall gone up. Bajaj two-wheeler sales are down by almost 15% because last year their base was very large. They had recorded very high growth. And also Hero Motocorp and Bajaj sales indicate the recovery in the rural economy because most of these two-wheelers are sold in the uh, B2 and B3 cities and towns. So it shows that the rural economy is yet to pick up. And we see the same kind of movement in two-wheeler stocks and FMCG stocks. FMCG stocks are also mainly depending on recovery in the rural demand. So we see that FMCG stocks also are stagnating for past several months. So this indicates that rural economy is yet to pick up. Escorts, Kubota and Eicher Motors. The tractor sales are almost stagnant. That is another indicator of rural economy. Bullet motorcycle sales are quite good for Eicher Motors and it has gone up by 11%. Hero Motocorp, especially in the premium two-wheeler segment, has shown good sales. The sales have gone up by 5.6%. So, since these automobile sales give a good indicator about the economy, I am discussing the auto sales data in a detailed way every month. Now let us look at other indicators like PMI manufacturing data has come at 58.6. In the month of July, it was at 57.7. So 58.6 is a very good one. That means the data indicates that economy is in a expansion mode. RBI dollar reserves is stable at around 594.86 billion, and rupee after touching 83.2 in the previous weeks now is stabilizing at 82.72, and dollar index is at 104.26. Gold price is at 60,250 for 10 grams 24 carat. Crude price is again inching up. It is at $88.55 per barrel. Rising crude price is a concern for Indian markets and Indian economy. That will push up the inflation. We have recently seen that government has cut LPG prices by around 200 rupees, and government is taking many other several steps like ex- putting export duties, banning the export of food articles. Government wants to have a control on inflation. So that gives a confidence to the market that inflation may not go up considerably uh, because of the government efforts. That is good for the market. FIIs have sold. They have been selling for past several weeks. This week also they have sold 4,312 crore in equity, whereas DIIs continue to buy. And on the back of good SIP flows into the equity markets by retail investors. So DIIs are mostly comprising of various mutual funds. So they have bought 9,700 crores worth of equity during this week. Market is getting a good support by retail investors through mutual fund SIPs. Market is going up on the growth of expectation in GDP and stable and improving macro fundamentals of the economy. What are the risks for the market? Global geopolitical scenario, what is going to happen in Ukraine-Russian front, what is going to happen in Taiwan and China. These are all the some of the geopolitical risks which may disrupt global supply chain. Then upcoming elections in India, there are few states going for elections in November, December, followed by Lok Sabha elections. That will have a overhang on the markets. Then shortfall in monsoon. We have seen good rains in the month of July, but August there were no rains, and this may affect the farming and output of agricultural production. That is another risk for the markets. Due to these risks, we see market is seeing some pressure when Nifty reaches 19,600 to 800 levels. Market valuation considering 1 year forward earnings looks quite fair. Despite the rally, I've looked at the market valuations. Valuations are not going up. That shows that the earnings, good earnings from the companies is helping. Despite the rise in indices levels, the valuation is not going up. That shows the strength in the earnings of the companies. But India is trading at a premium valuation considering to the other emerging markets because of our strong macroeconomic fundamentals and our system of democracy is getting the premium valuation, and FIIs and foreign investors, they look at Indian market quite attractive to them comparing to many other emerging markets. That is why India is trading at a premium valuation, and this is likely to continue like this. I don't see any big correction coming in the markets if unless there is a some untoward development like what happened in Russia and Ukraine a year ago. Otherwise, the market will either consolidate or they will go up, and valuations will be premium. But considering the earnings for next 1 year, the market valuation is quite fair. So I recommend that investors should add to their investments and hold on to their investments. Mutual fund investors also should continue their SIPs. They can look at putting lump sum money also at the present level with 2 to 3 years period. I am sure they will get very good returns. So this is all for this week's. We'll see again next week. If you like my video, please subscribe to my YouTube channel, share with your friends. You can post your comments, which I will reply. We'll see you next week again. Thank you.